Hello, my name's Enrique, and here in the Power Brokerage, we like to give some useful information to our agents and potentially their clients as well. So today's topic is on flat extras. So flat extras, what does that mean? So if you're in the business of life insurance and you're getting information from your client to determine whether or not they're insurable as far as their health, specifically talking about health, then this may come into play if you find out that the individual has some sort of health impairment. In this case, the flat extra is applied when there's a somewhat of a risk, but it's still an acceptable risk to the insurance carrier. And so let's dive a little bit more into this here. In a moment here on your screen, you're going to see what's called a quote fact finder. And one of those questions may be on their history, their health history. And this section right here that you're seeing now has to do with medical impairments. So let's take an example as far as cancer survivor. So many times people wonder whether or not they are eligible for life insurance if they've been in remission for quite some time. And once more, this is just an example. So let's take the example of a cancer survivor. We're going to say colon cancer. And let's say that the person has had a treatment, their last chemotherapy treatment was, say, 5 years ago. So now the insurance company, with everything else being equal as far as their person's health, let's say that they're non-tobacco, their body mass index is in good shape, there's really not an issue with either diabetes or, say, blood pressure, but all of the things being equal, they are just simply a cancer survivor with their last treatment 5 years ago. So with this form that you're looking at, and the one you should be looking at now is as an example, the one you're looking at now is for cancer. And you submit this information. The carrier will do what's called a risk assessment. And they'll let you know, quite potentially, that this could be a preferred rating. But they've indicated it's going to be a flat extra charge for a number of years. So determining that, yes, it is an acceptable risk, the insurance company will indicate to you, let's say, $5 per thousand flat extra for 5 years. So what that means on the illustration itself, when the report is generated, the premium is going to be $5 per thousand more as far as cost, and it's going to be on the illustration shown for the 5 years. After the 5 years, let's say this person, we'll say there's a 35-year-old person, has coverage for 30 years as far as the illustration. Well, after the 5th year, the premium is going to drop because of that flat extra going away.